Hi there, welcome to Kneppy Invest. Time for an update to Pointerra. This is a request from a viewer. They did ask me if I could do an updated video on Pointerra's Appendix 4C for the September quarter, and I thought, why not? Although, in saying that, not much has changed for this company. They're still moving in the right direction, in my opinion, yet the market is becoming less and less interested in this company, it seems. And the reason I say the market's becoming less and less interested is all based off the volume. The volume is getting, or the volume traded is getting smaller and smaller with passing time. So let's get stuck into it. Won't talk about what Pointerra does. Hopefully you already know that. But the first things we're going to do is talk about some facts in regards to this company. Now, Pointerra does deal with very large 3D data sets, and this company was founded in 2015, so it's not a very old company. It didn't directly list on the ASX. This was a backdoor listing via another company called Sol Sub Technologies. That was in July 2016. The current CEO is Ian Olsen. He has a 7% stake in the company. And one of the reasons the market got really excited about Pointerra was because Bevan Slattery, through Capital B, bought a large stake in the company. And that was really the catalyst behind the re-rate, or the initial re-rating in this company. And that was in the middle or towards the end of 2020. The current market cap of Pointerra is 135 million. That's at a share price of 20 cents. Share price high of this company is just under $1, which means at its top, at the top of the hype, at the top of the froth in this company, the market cap of Pointerra wasn't quite $1 billion, but it was more like, say, $600, $700 million. And the ticker code is one of my favorite ticker codes on the ASX. It really suits this company, in my opinion, and that is 3DP. The motivation behind me doing this video today is the September quarter results. But before we have a look at the September quarter results, I just want to focus here on the financial year 22 results, because the September quarter was or is the first quarter of financial year 23. So I just want to see how this company is performing. And when it comes to revenue, this company is growing. In fact, revenue more than doubled from $4 million to $9.8 million. Now, I was quite excited about this company back a few years ago because I thought this company was showing some scale, and I thought this company would become highly profitable. But unfortunately, this company really hasn't shown me any scale, because even though the revenue has more than doubled, we've also seen costs increase, in fact, more than double as well. And that's why the operating cash flow of this company has actually decreased from almost even to negative 1.6 million. And the company is less profitable. No, it's probably not the way to say, is more loss-making in financial year 22 than they were in financial year 21. So only loss-making by $1.5 million in 2021. Now it's 2.7 million. So one of the reasons I think the market has sold off this company is because of the lack of scale. The market wants to see that this increase in revenue is going to be falling to the bottom line in terms of increasing in cash flow and increasing in profit. And Pointerra hasn't proven that to the market. And to be honest with you, these sort of companies that haven't shown scale to the market, they are being sold off. And that's why Pointerra share price and market cap has taken a significant hit in the financial year, or actually calendar year 2022. The company does have net cash of 3.6 million. That's at the end of financial year 22. Price to sales ratio 13, which is not excessively high. It was significantly higher when the share price was around 90 cents. And the annual contract value, not quite doubled, increasing from 9.8 million to 18.2 million. Now, I'm not the biggest fan of annual contract value, particularly how Pointerra shows this number. And I'll talk about that later in the video. Before we have a look at Pointerra's September quarter for financial year 23, let's just go back 1 year ago to the September quarter financial year 22. And this was a disappointing quarter because receipts to customers was only 983,000. Now, one of the things about Pointerra is they do have lumpy revenue, lumpy receipts if you're only looking at the quarter by quarter numbers. So you do have to get, or probably look at the yearly numbers to get a better gauge on how this company's receipts and revenue are growing. If you just look at one quarter in isolation and compare it to the previous quarter, you might get some dodgy numbers because receipts to customers in this quarter, 983,000, was significantly lower than the previous quarter. And because receipts for customers was low in this particular quarter, the company was operating cash flow negative by 931,000. And unfortunately, because they were bleeding a lot of cash in this quarter, the cash on hand actually fell from 5.2 million to 4.3 million. Now, the good thing about Pointerra is they don't spend a lot of money in financing and investing activities. So the operating cash flow will fall to the bottom line. So if this company was operating cash flow positive by $1 million, they will see their cash on hand increase by about $1 million. So that is one good thing about this company. Now let's have a look at the September quarter for financial year 23. And this was a good quarter in terms of cash receipts, a record quarter for the company, receipts up to $3.4 million. And because receipts up $2.4 million from 1 year ago, and because the spending didn't quite increase the same rate as cash receipts, the company was operating cash flow positive by $213,000 in this particular quarter. I would prefer that to be a little bit higher. And we have seen some quarters in the past few years where the company was operating cash flow positive. So I want to see some scale for Pointerra. I want to see this company increase their operating cash flow when they have a really good quarter, like they did have in the September quarter, the first quarter of financial year 23. So even though it was operating cash flow positive, there was some tinges of disappointment for me. Now let's have a look at a graph the company provides in every single quarterly release. And this is looking at the cash receipts and annual contract value, sort of a cumulative cash receipts and annual contract value, which is not a cumulative, but they're looking at the last 3 years. Now, the reason I have a massive problem with this particular graph is they are comparing cash receipts in Australian dollars and annual contract value in American dollars. I just wish they would use the same currency when they are comparing the two. But if you can sort of give them the benefit of doubt in regards to that, the thing that you take away from this is that annual contract value is increasing at a fairly consistent rate from quarter to quarter. In fact, over the last 6 or 7 quarters, annual contract value has risen by about 2 million from the previous quarter. It's not always exactly 2 million. Sometimes it's a little bit more than 2 million. Sometimes a little bit less than 2 million. But it has been consistently rising by about $2 million. So we would or should expect that to continue to rise. And as annual contract value rises, we should also see cash receipts rise. But cash receipts won't rise at a consistent rate, unlike annual contract value. I just wish annual contract value was in Australian dollars. I'm not sure why they decided this. There might be some legitimate reason behind it, but I haven't really delved deeply into that. But it's just one little thing I have against Pointerra and this particular graph. I've already mentioned that receipts for Pointerra can be quite lumpy, and this is the proof. This is the receipts history for the company since December quarter 2017. And really from that quarter all the way through to say the start of 2021, receipts weren't that high. In fact, receipts were less than $1 million and starting to grow. We've really seen receipts take off over the last few years, but the main thing is don't get distracted by the lumpiness. Don't get distracted by that odd quarter where receipts take a significant hit like it did in the September quarter last year and also the June quarter of 2022, the last quarter of that financial year. The main thing here to take away from this particular receipts history graph is that receipts are trending up through time. And no doubt, as Pointerra does mature as a business, as they gain more customers, they get more revenue, we will more than likely, or the company will more than likely see receipts become less lumpy. So what's the word for less lumpy? Stabilize or something like that. And I would expect that say in a few years' time, when this company has significantly more customers and significantly more revenue and receipts. Actually, the word I was looking for was smooth, because smooth is the antonym or the opposite of lumpy. Anyway, this is Pointerra's daily chart, not quite the yearly chart. This goes back to August of 2021. So if we are in November, that means a 15-month chart for the company. Share price of Pointerra has been in a downtrend for quite a while, has been a downtrend through this 15-month period. And really, to be frank with you, there's no end in sight to the downtrend in this company, because whenever the company releases some good news, the share price initially increases and then selling comes in and then the share price falls away. We see this continually for the company. And not only that, the 100-day moving average tends to be a fairly strong resistance level for Pointerra's share price. Every single time the share price gets right on the 100-day moving average or gets above the 100-day moving average, we see that then fall below that moving average. We have seen that happen countless times over the past year. And it just happened when the company did release their quarter report. The market did actually like it. Share price did rebound above the 100 moving average. In fact, the share price went to about 24.5 cents. And then the next day, or in fact, that day, we did see a little bit of selling, some high volume coming in. That volume continued into the next day, and the share price actually fell to about 21 cents. So a fair bit of selling comes in when the market sees some good news from the company. And the reason that has happened is all about psychology of the investor. So a lot of investors have bought into Pointerra at significantly higher share prices in the past few years, and they want to get out of this dog stock. That is the mindset of a lot of investors. So a lot of investors, when they initially buy into a company, expect the share price to rise almost immediately. And when it doesn't, when it starts falling, they automatically think that company a dog stock. They think they have made an awful decision. And I have heard this time and time again. In fact, I've heard this from my colleagues at work. They have said, I bought into this company, and the share price has gone down, and as soon as the share price gets back up to where I bought it, I'm going to sell. And that's the problem Pointerra faces right now, as the share price has been in a long-term downtrend. As the share price goes up after some good news, we have those sellers, those shareholders who want to sell out, take advantage of the increase in share price, and that puts pressure on the share price, and that's why the share price pulls back. What we need to see from that company is some really, really good news. And that really, really good news would coincide with some really good volume. And the best good news this company would release is a really good financial report, say a quarter report with, say, operating cash flow of $2 million, something like that, or a massive contract. That's another thing that might put a rocket up the share price. And the reason we need good volume is we need to see the market interested in this company again. So if we go back to, say, the end of 2020, start of 2021, there was a lot of interest in this company. We saw lots of volume traded, but we've seen that volume decrease over the past year. Significantly lower volume now than what we saw back in September of last year. You can actually see the volume, if you look to my right here or left here, on this side here, you can see some really good volume in September last year. And the volume now, right now, nowhere near matches that. And with the decreasing volume, that is telling me the market is becoming less and less interested in this company. There's less traders, even investors are becoming less interested, let's say long-term investors. So the company needs to release some really good news, not some okay news like I did in the September quarter, some really good news to get the market excited about this company once again. And that's all I have for this update to Pointerra, focusing on their September quarter, Appendix 4C, the first quarter of financial year 23. To be honest with you, no surprises in this September quarter. We saw annual contract value rise by $2 million. I expected a fairly significant rebound in cash receipts because last quarter was a disappointing quarter in terms of that. So no surprises. And I do think maybe the company has to release a positive surprise to the market to see the share price move back into an uptrend, to see sentiment in this company shift from negative to positive. If you have any thoughts about Pointerra, thoughts about anything to do with this company, if you think I'm mistaken about anything in regards to this company, I'd love to hear it. So leave it in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.